Hey there, Brian Bogner and Greg Towner here, and we just want to bring a very special message to our clients, especially our retiree clients. It's Monday, March 23rd, I believe, and a lot happened. We did a webinar on Friday. A lot happened over the weekend, and we just felt it was really important to get this out and get a message to y'all about a few things, because here's what we're hearing. Especially from some of our retiree clients. Let's sell stocks, let's sit in cash until things settle down, let's just hold off and wait. You know, I don't have as long as you younger folks for this to recover, so maybe we need to be selling here and preserving capital. How much more can it go down? I mean, it's gone down so much. I mean, this thing, you know, there's talk of like we may lose it all. We may lose everything. This volatility feels awful. Can we just freeze the account? Can we just sell out and just stop it? Stop the pain that I'm feeling right now, okay? And these are real feelings. I'm not trying to discount them. These are important feelings and they matter. And so we want to just take a few minutes and talk through them and address them, okay? So first of all, let's just go through some bad news and some negative stuff right now, because the fact is that is what's going on. Recession is not probable. It is pretty much evident. It's going to happen, all right? Unemployment will rise. You can't tell people to stay at home and not go to work and businesses shut down. People are getting laid off. We're going to see a spike up in unemployment numbers, okay? There will be bad economic numbers. There will be negative news. It's going to be around for a while. We're going to have bad news. You're going to turn on the TV. You're going to see it in the paper. My encouragement to you is get used to it the best you can. I know it's shocking to see, but it's going to be around. These media outlets have to report something, and there's not a lot positive to report right now, okay? So let's just take it though for what it is. These are headlines, it's being reported, this is what's going on. There's still too much uncertainty. We were hoping we'd get that stimulus package passed today, and it didn't get passed, which is gonna lead to continued volatility in these markets, all right? So there's a lot of negativity, and there's a lot of, and it's not going away tomorrow. It's going to be around a little while. Exactly how long, I don't know. We don't know. But right now, that is what's going on, all right? Now, let's turn the page, okay? What we do know is that this contagion and pandemic will subside. It will not last forever. It will come to an end, okay? We're even, you know, we mentioned on the webinar, China's already back to 80% production levels. I heard a stat today that Japan's also doing pretty good as well. I don't know the exact numbers behind it, so just take that for what it's worth. But we're starting to hear that countries that were early on in this are starting to get back to work and do some things there. This is not going to last for eternity, all right? This will end, all right? The negatives right now, everything that we've been talking about, again, we've mentioned this before, it's all been externally driven, okay? It's all been you know, it wasn't like these companies and this stuff were starting to crumble underneath and then this happened. Things were chugging along amazing. Matter of fact, we saw some housing numbers this morning that, I mean, the housing market was just really hitting its stride and really beginning to do well. This was all, it just came out of left field and hit it, and it's hit us hard, okay? But there is unprecedented global stimulus action that is being talked about, okay? Greg, I know you wanted a few things to talk about that there.
Yeah, I thought it was important to take a look at something here. You know, when we look at what's being done now by the Fed and other central banks throughout the world, uh, they're actually taking really quick and really strong action. You know, if we go back to 2008, that period, the Fed actually didn't start really doing much until 13 months into what ultimately was known as the start of the recession. So
Right.
they were really slow to react, both here and abroad. In fact, you know, right now the Fed just went all in basically over the weekend by saying, you know, we'll do unlimited purchases of quantitative easing. And then while obviously it seems like the Congress is moving slow and we'd like to see them move faster, compared to 08, they're moving much faster. So
Right.
by and large, are things perfect? Obviously not, but I think things are moving quicker from a response than we've seen in the past. And that ultimately will be good, even though it hasn't, you know, really taken effect yet. On the other side of this, we'll see that the swift action was a positive.
And I think, you know, just to add to that, okay, this next point here is what we see happening is there's this big tailwind starting to build up, okay? Liquidity, fiscal stimulus, monetary, all this stimulus is starting to build up. All right. And when this pandemic ends, when things begin to turn, this tailwind we believe is going to catch and push this thing hard. Now, don't take this to say that we're going to be right back up at the highs like we were a couple months ago. That could take a while to get back there. But when we get back to this question, some of these questions we were talking about here at the beginning, right? Should we sell? We think, when things turn, I don't know exactly when it's going to happen. We're not trying to pick the bottom, but when it does happen, we believe it's going to happen strong and it's going to happen fast, especially off the lows. Okay, and we still may see lower lows than we have today. We don't know, but when things begin to turn, there's going to be so much tailwind that's going to push this thing up. Speaking of stocks right now are at record oversold levels. Okay, and we've got a chart here to show you, and I'll let Greg talk through this.
Yeah, there's a lot of different ways to look at how oversold stocks are. This is one of our favorites, and this data point basically goes all the way back to the 1950s. You can see each of those little red arrows on the chart signifies where we were at a point similar to where we are now. So again, to what Brian said, that doesn't mean we know we've bottomed or stocks are going to rip higher from here. But what we know looking back is when we were this oversold, it was a bad period to be selling stocks. And in hindsight, you would look back and say, wow, I didn't want to be selling there. We were near a low. Now, it may be days from now, weeks from now, we don't know. But in general, it's a bad point to be selling stocks. So of course, you always want to have your rainy day fund, your cash to get you through these volatile periods. But it's also important to look at, hey, when that positive news eventually comes, there's a lot of things at our back to help us out.
So in closing, our message is now is not the time to sell. We know this hurts. We know this is not pleasant. We know this is not good. But historically speaking, selling here has never been a great time. That being said, if you're staying up at night and you're not sleeping and this is affecting your health or affecting you, please call us. Please contact us below. Let's talk through this with you individually. Okay, that's what we're here for. All right. But our encouragement to you is let's stay. If the best that we can, let's keep that longer term perspective and let's stay with us. So thanks so much for your time today, and we'll talk to you soon. All right. Bye now.